Yeah, and I think first and foremost for our listeners, and as we get into this conversation, I want to set the stage by talking about, what results in an asset increasing in price. Well, if we're going to go to economics 101, that's supply and demand, right? So how many buyers do you have versus how many sellers? If you have more buyers, they're going to, sellers are going to demand a higher price for it, and that's going to lead to increased price over time. And that's what we're seeing play out. But whenever you see something get squeezed, especially if you're talking about something that's up 60% year to date, typically you're thinking, hey, maybe that asset value is a little bit smaller. There's not that much supply out there. So a little bit of demand can really lead to higher, price increases. That's not the case for gold. Gold has a $27 trillion market cap. That's, six times the world's largest company, which is Nvidia. So you're not talking about a small asset class or a small, asset that you're talking about when you're comparing the supply and demand dynamics. Now, what we're going to get into as far as the drivers, we will talk about those underlying dynamics and why it is pushing gold's price up. But I think it's important to set the stage in saying that this is not a small asset, and a rise in price like this is very significant.